Welcome to the Stock Market Daily News Podcast. It's January 8th, 2026, and I'm here to break down yesterday's market action and what it means for your portfolio. Let's dive into the numbers. The S&P 500 slipped just under 0.2%, closing at 4,928. The Dow Jones dipped less than 0.1%, while the Nasdaq fell about 0.25% amid cautious trading. Investors weighed a mix of global headlines, sector moves, and some key company announcements. Stay with us to hear how the Venezuela oil story could shake up the entire U.S. energy sector, why Goldman Sachs is flashing caution for stocks, and what to know about Samsung's new share buyback. First up, Goldman Sachs sees choppy waters ahead for U.S. equities. The firm's strategists warned that while stocks aren't headed for a crash reminiscent of the 1920s or the 1987 meltdown, bubble-level valuations are raising eyebrows. U.S. stocks have been riding high, with the S&P up more than 30% last year. But as valuations stay elevated and economic growth slows, investors may want to brace for more volatility and lower returns. The lesson: it's time to stay selective and avoid herd mentality. Turning to the energy patch, investors are eyeing Venezuela after the U.S. raid over the weekend and speculation that the country's oil sector could reopen to new investment. Analysts say a surge in Venezuelan crude might pressure U.S. shale producers, especially smaller firms already squeezed by falling prices. While refiners may benefit from heavier crude flows, West Texas Intermediate closed yesterday around $56 a barrel, with Brent crude at $60, both down roughly 2% year-to-date. For energy portfolios, this could mean a shift: refiners in, high-cost shale players out. In tech, Samsung Electronics jumped into the headlines with plans to repurchase $1.73 billion worth of its stock for employee compensation. The buyback underscores Samsung's push to retain top engineering talent as competition ramps up in semiconductors and mobile. Investors are reading this as a positive commitment to long-term growth and a possible boost to share prices if buybacks help offset market volatility. Zooming in on the UK, the FTSE 100 is poised to snap its recent three-day rally thanks to new worries about oil prices, currency moves, and global uncertainty. The pound wobbled slightly against the dollar, and analysts say more volatility could be in store until clearer signals emerge on fiscal policy and geopolitics. UK exposure may need to be watched closely if you're holding international stocks. Finally, in the financial sector, debt capital markets in India are cooling after a sizzling 2025. Higher bond yields are steering companies away from fresh bond issuance and toward bank loans. Axis Bank, the nation's top arranger, saw deals grow just 5% in the past year, and the 10-year benchmark bond yield crept up to 6.61%. Expect more caution in fixed income allocations as borrowing costs shift. Quick recap: the S&P 500 closed at 4,928, Dow at 37,610, and Nasdaq at 15,324. The big market themes rattling investors: U.S. valuations near the top, energy sector rotation, and global catalysts affecting everything from European equities to Asian tech. Looking ahead, keep an eye on the Fed's next rate decision and upcoming earnings from the big banks later this week. Don't miss our market updates. Subscribe, follow, and check out our latest analysis online. Thanks for tuning in to Stock Market Daily News.